Welcome to How I Raised It, the podcast that goes behind the scenes with entrepreneurs who've raised capital. We uncover the tips, tricks, and techniques they use to get investors to write a check. Strap in and turn it up.
Hi, welcome to another episode of How I Raised It, produced by Foundersuite.com. Today I have Joseph Woodbury of Neighbor.com coming to us from Salt Lake City. How's it going?
Good. How are you doing?
Good. It looks like you're back in the office, or is that a virtual screen?
Yeah. I've got 4 kids at home, so I kind of have to come in the office.
I hear you. I'm using my wife's office, which is a lifesaver. Like, I have to get at home. Like, I'll start off the Zoom calls with my kids in the morning for school, and it is cacophony, right? You've got like, it's painful to hear. I can't get any work done or focus. So having an office killer. What's the scene in Salt Lake City these days? Are things opening up, or are you kind of still pretty locked down there?
Yeah, I'd say we're one of the more open states. Most of the restaurants have started opening up again, and it's good. Everyone's being cautious. I think it's kind of the right balance between caution and still letting businesses open and do well.
Are you a native Salt Lake City-er?
I'm actually from Vegas originally.
Okay, interesting. Neighbor, great name. What do you guys do?
So we're a marketplace. We take unused or wasted space and we'll rent it out to those who need it. It could be a basement or a bedroom in your house, or a garage is very common, or a driveway. And then we'll come store someone's boat or RV in your garage, or their boxes of clothing, or maybe some furniture items in your bedroom or your attic. And that way you don't have to go to a storage facility. We're much safer in these residential areas, and we tend to be about half the cost of a traditional self-storage facility. So it's good money savings for the renter. And of course the hosts are making really passive income every single month off of space they weren't using anyway.
Yeah, it's interesting. I've got a couple motorcycles and they're on the street, and I really want to put them in a garage. So I'll have to poke around and see if I can find a garage somewhere.
We actually get a lot of classic cars stored on our website. A lot of people, they may have their 64 Corvette or whatever, and they're looking for a place to put it. They want to drive it regularly, so they don't want it in some storage facility 30 minutes across town. And we'll find them a garage just a few doors down. Maybe their neighbor has a 3rd-car garage. They go store it in there, and then they can go grab it whenever they need and take it out for a ride.
I'm sure there's an FAQ section on your website that addresses all this, but if I'm the car owner, how do I know that the garage owner's not going to trash my car, set it on fire, let their kids crawl around in it, whatever? And then likewise on the garage owner's side, aren't I nervous giving this guy keys to my garage, which is connected to my house? Like, basically, how do you overcome those sort of like safety issues?
Yeah, that's where we kind of really sit in the middle and play an important role. One of the things we realized when we started Neighbor that hadn't really occurred to us when we first had the idea was we realized everyone is doing this already. Like, we didn't invent this idea. There are a lot of people storing stuff with their neighbors all over the country already. So when we came in, we really just provide exactly what you're describing, and that's the safety and the assurance. We collect the payout up front and hold that essentially in escrow for 30 days, and then don't pay the host until the end. So the host knows they have to render good service to the user, and the host knows that they will get paid because we've already collected the money up front at the start of the month. In addition, our platform provides a $25,000 guarantee to everyone that's storing on the platform for everything they store. That's, so far as we know, the best insurance offered in the storage industry nationwide. If you go store your items at a storage facility and that facility burns down, your items are not insured. Most people don't understand that. Like, the facility will not replace your items. If they're stolen from the facility, they will not replace those. But on Neighbor, if you're storing with Neighbor, those are covered up to $25,000, which is really overkill. Most people are storing, $1,000 to $5,000 worth of goods. We just wanted to make this a better service. In addition, like, both parties agreed to a rental agreement. So The renters are agreeing not to store certain prohibited items. The hosts are agreeing to protect the items while they're in the space. Our hosts are also protected. I mentioned the $25,000 guarantee we have for the renters. The hosts are essentially running a business out of their home now, right? They are renting out space. So there's always some liability when you start a business, as most founders know. And each of our hosts are taking on some liability as part of running a business out of their home. And we actually have a policy. We protect all of our hosts up to $1 million for all of their business liability they're taking on. So it really is a safe platform, and that is kind of the value that we as a platform provide.
I love these ideas that are, on the face of it, very simple, right? I mean, it's a fairly simple idea. Obviously, you've worked out the nuances and some of the tricky parts of it. How long have you guys been around, and how did you come up with this idea? What were you doing, or what was the backstory?
Yeah, we've been around for about 3 years. We started this in 2017, and like most good ideas, started this from having the pain ourselves. My co-founder was looking into getting a storage unit and kind of had the same experience that everyone has. The closest unit was like a 30-minute drive away in some industrial park, and he was going to have to pay $300 or $400 a month, and like he was a student at the time, and he was just like, that's crazy. I'm not going to spend $300 a month for some dirty, dingy, box, a half hour across town to store my items. So he started looking amongst his friends, found a friend that was willing to let him store in his garage, nice garage in a nice neighborhood. He left, he was leaving out of the country for 4 months for a humanitarian project. He came back after 4 months, and he went to pick his items up and just had the thought like, wow, I had so much more peace of mind knowing my items were in this nice, clean, safe garage than I would have in a storage unit. And it was a lot cheaper for me. Why doesn't everyone do this? We've got so much empty garage space all around us. Like, what if there were some sort of online directory for garages? And that's kind of where the idea got started. He recruited me and our other co-founder. We started working on it, and it just kind of took off from there.
What were you doing before this? What was your?
We're all students. So my co-founder and I were at the Brigham Young University here, and just down the street, our third co-founder was at the University of Utah. We all knew each other beforehand. I worked on some projects with Preston. Preston and our other co-founder Colton had spent some time working for a startup actually down in South America for a while. So a lot of close connections. We had all kind of finished up our junior year, done our final internships in school, and landed full-time job offers. We'd all accepted those full-time job offers and kind of had plans to go into the corporate world. I was headed off to Bain & Company to be a consultant there. Had accepted a full-time offer, and our senior year, when we were just kind of waiting to finish our undergraduate degrees, that's when Preston had this idea. We started working on it. As I mentioned, it kind of started taking off. So we all called our jobs and said, hey, we're not going to show up. So never showed up to our full-time jobs after school, and the rest is history.
So that's an interesting anecdote, because Bain & Company, that's a really coveted job for any, graduating college student, right? So how far along was the business? Did you have 500, 100, storage spaces rented out when you're like, okay, I think we actually have something here? Or were you still pretty much, conceptual when you decided to turn down Bain, right?
It was pretty early. So we had launched a product, like our website was live. It was a very, very early limited version of the website. When we first started this, we were doing everything kind of manually. Like someone would find someone on the website, and you couldn't really pay through the website. And so we would call up the host and let them know someone's interested in your space. Then we call the renter and ask, what they were willing to pay. And we kind of work it out all manually. We were still kind of in this early phase where we were mostly working with, students going home for the summer and needed a place to store their items. We had not raised money yet. So all of us kind of quit our jobs at a phase when there was still a lot of risk. It certainly was not a guarantee. Like one thing was clear, and that is people wanted this, we didn't have to work hard to find people that were very, very interested in an alternative to the storage industry. Everyone hates using a storage unit.
Yeah.
And so that was, inspiring for us. The thing that gave me the most confidence is like, I didn't know in those early days how well the business would do. It's impossible to tell, but I knew that I wanted to work with people like my co-founders, Preston and Colton, just super solid, high integrity people.
Mm-hmm.
And so that was an easy decision for me. I could go to Bain and then maybe find an opportunity to work with great people afterwards, or I can just work with great people now.
Sure. That's a good analysis equation. The business reminds me a little bit of a company I knew from several years prior called UShip that was matching up. When you talked about students, UShip was matching up people who had a trailer going across country, and maybe they had a third of the trailer unfilled so they could put it out on the marketplace. And if I'm wanting to ship something, I could put it in there. It's kind of I love these excess capacity marketplace models. Pretty cool. How'd you finance it in the early days? It just sounds like you guys are doing this all together, but I think I saw a grant on there. What was that about?
Yeah, so the first money in the door is we competed at a lot of local business competitions. We'd enter these competitions, we'd lose some of them. We started winning some of them, and we'd get $10,000 here, $10,000 there. I think in total we probably brought in $35,000 from these competitions, and we were like, oh, we've made it. We could run a business on $35,000 forever, right? Of course, that goes pretty quickly, especially as you start to experiment with more scalable methods to grow the business. You can only do door knocking and kind of these growth tactics for so long.
Sure.
We were fortunate that in participating in some of these business competitions, a lot of the local venture capital investors attend those, and several of them actually reached out to us and said, we really like what you're doing and how you're executing on this. We can tell you've got a good team, and we'd love to have you in. Tell us more. And that was kind of the impetus for our seed round is really participating in those business competitions. And rather than reaching out to venture capitalists, it's always a nice position to be in when they see you and they're reaching out to you because they're already in a position where they're interested.
Funny you say that, because UShip, again, that company that I mentioned, that's where I met them. I met them at a business plan competition at my alma mater, University of Texas. And I think that's almost the same exact story, as they got exposure to some VCs and they've gone on to raise from Benchmark, but some other really good firms. So did those VC meetings, was this Salt Lake City venture folks, and did it lead to a seed round? Maybe talk about the first money beyond the business plan winnings.
Yeah, so it did. It led to conversation with most of the large venture capital firms in Utah, which was good to have a decent amount of interest because it enabled us to get in a position where we had multiple term sheets. We ended up going with the largest venture capital firm in Utah. It's a firm called Pelion Ventures. And then we also brought in a group called Album Ventures to syndicate on that round. They're another. At the time, they were the largest seed fund in Utah.
Okay.
So we had kind of the largest venture capital firm and the largest seed fund participate on that. It was great to bring on two different partners that could guide us. We were all young founders, and they were very, very helpful in the early days, and gave us those first few $1 million to get the business up off the ground and expand.
Got it. Cool. Where was the business at that point? Were you live in Salt Lake City, or had you already gone to other markets?
Yeah, when we raised that first round, we were just live in kind of the two main counties in Utah County and Salt Lake County. And again, largely dependent on kind of these two major universities. And we'd started to branch out a little bit into the community and to have, just everyday people in the community use us, but we were very much reliant on kind of these student renters. Now, looking back today, like those student renters make almost, none of what our business is today. Of course, we still service them and we have a great product for them, but of course, most of what we do comes from, just the general self-storage industry, people that would normally be getting a self-storage unit.
Did you guys, kind of poach off of Craigslist a little bit in the early days? Like you think of like some famous startup stories, like Airbnb was sort of poaching Craigslist, listings and turning that into their own platform. Did you guys do that at all?
Oh, absolutely. Like, we've read the Airbnb story, and all of those early marketplaces, we used, many pages out of their playbooks. I think one of the reasons we've been able to grow this business so quickly is in part because there were so many good marketplaces that came and did this before us, like Airbnb and Uber and DoorDash, et cetera. And we were able to learn from their mistakes, and also from their strategies. And I think do a lot of things a lot more efficiently because of that. We definitely played into those communities, whether it was Facebook Marketplace or Craigslist or anywhere else, to tell people like, hey, there's other options as well that are more targeted for exactly what you want, and aren't so general.
We're going to get to fundraising in a minute, but I think building marketplaces is also a really interesting topic. Do you run the risk of getting kicked off of Facebook Marketplace and other places if you're too? How do you balance? And maybe let me ask it this way: how do you balance the line between sort of siphoning off traffic from Facebook Marketplace or Craigslist or whatever, and not getting banned? Yeah,
sure. And I know there are other platforms out there that have taken like a really aggressive approach to those platforms. We've always kind of taken the approach of like strictly abiding by their rules and in a way contributing. Especially in the early days, we actually really, really encouraged and still do encourage, our hosts, especially in new markets, to go post their space on Craigslist as well. So, we not only create a great platform where people that may be on Craigslist or Facebook Marketplace can come list on our platform, but we're actually sending traffic their way. And it can be synergistic. Again, I know there are some of those early marketplaces that played like in a really aggressive role and basically broke the rules of the platform. We just kind of avoided that and just tried to work with the platforms.
Cool. Let's go ahead to, okay, so that was the seed round with Album and Pelion. And then a couple years later, so it's been about 2-ish years since that round, and then we fast forward to this Series A, which was led by Andreessen Horowitz. Do you want to talk about when you knew it was time to go raise the Series A? Was it your investors pushing you? Did you just see opportunities, or did Andreessen reach out? Tell me the story.
So we were very disciplined about like what we were going to do with our seed round, and I hindsight, that was really hard to do at the time. Hindsight, really glad we did it. We decided we were not going to spend our seed round like on a bunch of marketing campaigns. Instead, we built out a really robust engineering organization. We focused on the product. We iterated, listened to customer feedback, made sure, again, we'd solved all these nuanced problems, and we created like a best-in-class product. And we had a one-person marketing team really for the first, several years of the business. And we let users organically come to us. And then we kind of figured out how to service them best. Once we felt like that product was in a really great place where, users were just loving it. We were getting 70 NPS scores from our renters. That was when we felt like, okay, it's time to go push on the gas pedal a little bit more. And we started building out, the early foundation for a strong, growth and marketing organization. And we started expanding around the country, both organically and through paid channels. And we launched several markets outside of Utah. And what we were looking for was to really see like, when do we have a playbook for launching a market? And as we were able to do that in more markets and really nail down that playbook, that's when we said, okay, we feel like we've nailed down a pretty good playbook. Let's go raise an A round that we can really invest in our growth, since we know how to use that capital efficiently. Yeah. So that was the strong signal for us. We went out to raise, and as always happens, like it was a best case scenario raise for us. We raised, our target was $8 to $10 million Series A round, and we ended up raising a $10 million A round from perhaps the best partner we could have raised from. It's the first time Andreessen ever came in and led a round in Utah. So we were
Really?
super happy to give him some Utah exposure.
All right.
And we were able to land. The reason we were so excited about Andreessen is they have a partner. Their managing partner is a guy named Jeff Jordan. Jeff, he ran eBay back in the day, ebay.com. And then when they bought PayPal, he was the president of PayPal.com.
Yeah.
And then he went on to be CEO of OpenTable, the restaurant marketplace. And then since being at Andreessen, he's invested early on at Airbnb and sits on their board, as well as Instacart and Pinterest and OfferUp and a lot of these other big marketplaces, Lime Scooters, he sits on the board there. He's arguably the best marketplace investor in the world.
Yeah.
And we wanted that, as we were going to the next level of a marketplace, we wanted someone that had been there, done that, and scaled a marketplace several times to sit on our board. And so he was the reason we were so excited about Andreessen. But as you know, I kind of present that at the beginning to say, like, we ended up with a best case raise scenario for us. But going out to raise, it's kind of the same experience that everyone usually has. You talk to a lot of investors. I was every week I was flying out to sit in the Bay Area 2 or 3 times a week for meetings and trying to balance things back in Utah, and had a lot of no's and a lot of what VCs are famous for, and that is like, oh, we really like this, and then they kind of drag on the conversation. And then also had some yeses, right? And those yeses are always key to get the momentum moving. You get that first term sheet, and it's really helpful to create movement. The Andreessen opportunity, we had a few investors lined up that we were really excited about, and we're moving forward with, and actually thought we'd probably move ahead with those investors, and hadn't even talked to Andreessen yet. We got introduced to Andreessen. I flew out there, met with Jeff Jordan. I think my first meeting was Jeff Jordan, and one of the other general partners there. And they had a good experience. Met with them one afternoon. I went back to my hotel, had a flight out the next morning, was like, walking onto the flight in the airport, and I got a ping from Andreessen. They said, we really need you to, like, we know you've got a term sheet. We want to move fast. We really like this, but we need you to meet with 3 general partners to get a yes. Schedules aligned, and they were like, if you can come by this morning, we can have a meeting with Mark Andreessen, Jeff Jordan, and Andrew Chen. And if you can get 3 yeses, we can get there. So I got out of line at the airport and did not board the plane. Took an Uber back down to Menlo Park, had that meeting with Mark and Jeff and Andrew. And we got to 3 yeses. And then they were like, okay, what was that?
In the meeting or?
After the meeting, yeah. They let me have a few hours of agony. But once we got to yeses, then they said, we need to make sure everything checks out. So, like, we need a little bit of due diligence to get to a term sheet. We want to move quickly, so, like, we can get there in a couple days. And that started off the most intense period of due diligence I've ever been through with a venture capital firm. Basically around the clock. Those people at Andreessen, their workforces, I was getting texts and emails at 2 a.m., 3 a.m. asking me for information because they were moving quickly. They knew they needed to move quickly, and that's how they operate. That's how they win deals. And 3 days from first meeting with Jeff, we got a term sheet and thought it over, signed it, sent it back, and the rest is history, I guess. But it was a pretty amazing process to watch a firm. There's a reason some of those firms like Benchmark and Andreessen are considered the best. And it's because they take their work very, very seriously. They're willing to move fast. And the biggest thing that stood out to me in that whole process is how independently they make their decisions.
Yeah, interesting.
I had a lot of investors that I talked to through that process. Again, probably talked to 50 plus investors, right? I had a lot of investors sit down in the first meeting and ask the question of like, who else is interested? Like, how are things going? Never once was asked that question by Andreessen.
I love it.
They don't care who else is investing. They make all their decisions completely independent of whatever any venture capital firm thinks. And I really respected that about them. They just saw this. They thought it was a great opportunity, and independently of anyone else.
So that's such a great story. I mean, these classic, Silicon Valley or startup stories where you're about to board a flight. You get the call to go meet with Mark Andreessen. Couple questions. I have so many questions, actually. I'll start off with this one. What was it like, pitching Mark Andreessen, and like what kind of questions does he ask? I've been a fan since the mid 90s when he was at Netscape. So what was that like? Yeah.
So my favorite thing that Mark said in our meeting was actually a question he didn't ask, and he called this out. He actually mentioned it. He's like, just so you know, I'm not going to ask any questions about like, trust and safety in the marketplace. Like what's going to happen if so-and-so tries to store drugs or something gets damaged. He's like, because I've been through enough marketplaces that I know that there are great answers for those. And like, what I really want to focus on is like the market opportunity. I need to know if like a successful market can be built in this space. And I thought that showed a lot of wisdom, because that was the most frequent question I had probably got pitching venture capital investors is like, okay, it's marketplace, peer-to-peer. How are you going to figure out the safety of all of these items? And Mark just kind of understood that like smart people can probably figure that out. And we can probably have some policies on the website. We could probably get some insurance in place. And we can probably find ways to protect everyone, because people in the world are already interacting on a daily basis, and 99% of human interactions are positive. And you can protect against the 0.1% of cases. And he wanted to focus on like, how can we build, a successful, massive business in this space? And that's what's fun to talk about. That's that's where I feel the most confidence as well, because we're operating in this massive space. It's 4 times the size of the transportation industry that Uber and Lyft disrupted. So, it's fun to talk about that.
Yeah. Cool. What it sounds like you had some other term sheets when you got engaged with Andreessen. So 2-part question. Did you purposely stack Andreessen more at the back of your process, and what do you tell the other firms that you had the term sheets with? How do you sort of let them down gently, or did you bring them into the round under Andreessen? So
Honestly, it was pure happenstance. And we had one of our existing venture capital partners that was invested in our seed round. They had a new general partner that had just joined, that had a strong relationship with Andreessen, and he got word of our process kind of late in the game, and really fell in love with our business. He came in and said like, "Oh, this is one of my favorite portfolio companies. Super excited to work with this. So glad you're invested in Neighbor." And basically said like, these guys have to talk to Andreessen. I know the perfect person over there that is just the perfect person to help advise a marketplace. They've got to go talk with them. And so, set that flight up kind of last minute, went and chatted with them, and it ended up working out positively. But it was total happenstance that we had someone that wanted to make the introduction last minute. We actually didn't even tell Andreessen we had a term sheet. It wasn't like we were in a situation where we were trying to like, we wanted to see if they'd come to their decision on their own, and they did. And once they did come to a decision, we said, "Hey, we're glad you're interested in Neighbor. FYI, we've got to move quickly because otherwise, we're going to go with another partner." Right.
That's great. Jeff Jordan, I don't know the guy, but it sounds like he is just the perfect person for a business like yours, given his track record. So the question is, how do you leverage that asset what do you do? Do you have a quarterly sit down with Jeff? Do you do, what do you do to sort of tap that asset? Yeah.
Yeah, we made sure to put him on our board, and that was actually one of his biggest holdups in all of this. Is he's already on a dozen or so boards, not sure the exact number, and was not planning on taking another board. And I vividly remember the email that was sent with the term sheet said something along the lines of, was not planning on taking another board, but I just can't bear to pass up this opportunity. I'm gonna come join your board. And attached was a term sheet at the bottom. And that's been the best way to leverage them. Some people try to put off board meetings and have them really far apart. And our board would be totally fine if we had quarterly board meetings, but we've asked to have those every 6 weeks because we trust our partners. We've brought on great partners, and we want to have those discussions on a regular basis. And of course, sometimes having them at that tight of a cadence, sometimes you feel like you're rehashing the same topics in each board meeting. But startups move so fast. Like there's always important topics to talk about every 6 weeks.
Any general tips for working those board meetings, keeping them strategic, or?
And I think it's the same tips that a good board member would give you anyway, and that is, send out a detailed pre-read 24 plus hours in advance, and make board members prepare. Have them read through that so that you don't have to spend your time just going through and verbally speaking what's on the slides. Keep a lot of it in the appendix, and focus on, we structure our board meetings talking about what's working and what's not working. We literally have 2 sections, what's working and what's not working. And we're very, very, very candid with our board about what's not working, because we have a high degree of trust with them. They're not going to if we tell them that something's not working, they're not going to jump ship or anything. They're in this for the long term. They're in this to make money. And so they help us work through those problems, and we've overcome so many things to become a successful business. And then we have a very, very clear section for discussion items that we are going to want discussion on. And one thing that we've learned over time is that those discussion items are most effective when we come in with a proposal, rather than just saying we're not sure what to do. What does everyone think is the right answer? We come up with what we think is the right answer before the board meeting, and that's what the discussion circles around is whether that's the right answer or not. And if not, does anyone have a better idea? And setting up that straw man helps generate a strong discussion.
That's interesting. That's great. Never heard that before. All right. I won't keep you much longer, but any remaining tips you'd like to share for founders, or anything you would do differently if you could rewind the clock and do this process over again?
Yeah, I mean, I don't. I'd say there's been plenty of hard work involved in building a business, and stuff that we did do to make it successful. There's also been a lot of hope and prayer involved, and places where we got lucky, and that's just got to be part of it as well.
Do you have are there competitors? Do you have strong competitors out there? Is this a horse race, or are you guys kind of,
We don't. I mean, we have the storage facilities, obviously, and there's some $40 billion storage companies. But doing exactly what we're doing, there have been a lot of people that have tried it. I mean, since we've started this business, we've found dozens and dozens and dozens of companies that started this exact peer-to-peer concept. Really? And none of them really made it out of that initial first phase. Marketplaces take a lot of perseverance, because a marketplace is essentially useless when it starts. Marketplaces become useful at scale when the renter gets on and they see a ton of options very close to them in their neighborhood, and they can find the perfect option for them. And from the host perspective, again, at scale, they're getting lots of renters and reservations, so they're making a lot of money. But when you first start a marketplace, you have someone that lives 40 minutes away. There's one host on the platform and one renter, and they can't really help each other out. And so it takes a lot of hard work and growth hacking to really get that flywheel going on a marketplace. And so most marketplaces fizzle out in the first year or so, year or two.
Yeah. Very interesting. All right, this is great. If people want to learn more, I love the domain, neighbor.com. Did you start with neighbor.com or did you buy that? You must have been like Get Neighbor or something to start.
Yeah, we did not start with that. We went with the lift spelling, where we had a Y in there instead of the GH.
Oh, interesting.
And that's what we started with. It was like a 99-cent domain that we picked up. But we always called ourselves Neighbor, and we always had the vision of like, we want to own this name, because there have been many companies that have kind of started in this space again, and they've all called themselves, space this or stash that or whatever. It has to do with the commodity good, but we've always wanted to focus our marketplace on the people. And because we're such a hyper local marketplace, not a destination marketplace like an Airbnb, because we're so hyper local, we just think there's real value in our marketplace about building community. We're actually getting neighbors to meet each other that have lived close to each other for a long time but have never met each other. So we really love that kind of neighbor concept, and neighbors servicing each other very locally. And so we reached out a few times actually to the person that owned the domain. This guy that had owned it lived in California and had owned it since like the 90s and done nothing with it. Typical domain story. And he wasn't willing to sell, and then he was, but he wanted some ridiculous amount for it. And so we just kind of waited and continually made reasonable offers until we were able to meet in the middle, and best purchase we ever made.
I love it. All right, Joseph, thank you so much. Neighbor.com, check it out. I'm going to look for space for my motorcycles, and we'll catch you after your Series B round, all right?
Okay, sounds good.
Thanks, sir.
Yep, thank you.
Bye.